Tesla stock, TSLA, is fast becoming one that many people are beginning to covet, but early investors like Ron Barron are holding on to their stock even tighter. Ron Barron, who has a large amount of stock in Tesla, believes that the stock will increase by 30 times. Ron Barron is a successful investor and is bullish on Tesla. Today, we analyze some tips from Ron Barron as he talks about Tesla shares and what to do with them. Why does Barron believe Tesla stock will increase 30 times? Can Tesla become the Apple of the automotive industry? We will answer these questions and more in today's video. Ron Barron covered several important aspects of Tesla's business, as well as why the company's stock is worth investing in for the long run. He talked about what he thought were the most important short-term dangers that Musk's businesses confront. Barron Capital, Barron's investment business, is presently one of Tesla's major long-term stockholders. According to the investor, the company presently has approximately 6 million Tesla shares. Even after lowering his Tesla holdings, Barron has a whopping 41% of his largest funds invested in Tesla shares, making him the world's biggest Tesla bull. Since March 2020, this large gamble has nearly quadrupled Barron's net worth. Two of Barron's 17 funds in particular have a significant stake in Tesla. Last year, Ron Barron's $7.3 billion Barron Partners Fund, which he co-manages with his son Michael, returned about 150%. Furthermore, by the end of 2020, Tesla accounted for 47% of its assets. Despite selling a portion of its ownership in the company, the shares accounted for a substantial 41% of assets. The $671 million Barron Focused Growth Fund, which Barron co-manages with his son David, returned 122% last year. It has reduced its holding in Tesla from 39% at the end of 2020 to 32% as of March 31st. Tesla is the most significant investment I've ever made, Barron continues. According to public sources, by the end of 2020, Barron Funds was the 12th largest shareholder in Tesla. Among Tesla's top 50 institutional shareholders, Barron Funds had the highest percentage of its total portfolio committed at 12%. Other notable investors include Edinburgh-based Baillie Gifford, which has 11% of its portfolio in Tesla, and Cathie Woods' ARK Invest, which has 8.3% of its portfolio in Tesla. Ron Barron expects to retain his Tesla stock for another 10 years at the very least, and we look at this reason. Barron's Capital has owned Tesla stock since 2014, and when he bought it, his cost average was around $43. Since then, the stock has gone up more than 20 times, almost 30 times if Tesla hits $1,300. The stock recently reached $1 trillion market cap. Still, for someone as wise as Ron Barron, he isn't thinking about selling and has stated that his firm will likely be invested for another 10 years at the very least. Ron Barron has also stated that he spent years researching Tesla and speaking with Elon Musk before ultimately deciding to invest. So his decision to invest in Tesla did not just come out by chance. Many people disagreed with Barron's move and told him it would not work well at the time. We're curious what these people think now that they know Ron Barron has made $6 billion from Tesla stock, and his cost average was around $43. People said it wouldn't work because Elon Musk wasn't focused on generating a profit in the short term. This is what we have to say to people who disagree with Elon Musk and who really expect a big return in the short term. You want to win small, I want to win big. That's what Elon Musk must have thought to himself, and Ron Barron looks to invest in businesses that are willing to put off short-term profits to become more successful. The way Ron Barron invests is that he invests in businesses that invest in themselves. Tesla has used its profits to build more factories worldwide, expand its vehicle lineup, and start new companies. That's what he had to say. The 2020 Tesla Impact Report was brought up during the interview by Barron. He stated that reading this report would make you not want to sell Tesla. Elon Musk has dedicated himself to ensuring humanity's survival. Barron stated that this is due to the rapid development of electric vehicles and the advancements of private space exploration. Tesla and SpaceX have emerged as the two most popular companies for engineering graduates looking for professional opportunities. Tesla and SpaceX would not be where they are today without Elon Musk. The billionaire investor stated that the biggest risk to Tesla investors moving forward is Elon Musk's health. He's healthy, and I'm hoping he stays healthy for a really long time, he said. If something bad happens to Elon Musk, what would be the future of Tesla? Tesla's stock has risen dramatically since its creation in May 2010, and many investors have faith in Elon Musk. Investors' perceptions of the issuing corporation are the risk factors that impact a share's price. However, expectations about the company's performance are among the most important factors determining a stock's price. Analyst expectations of the company's profitability impact the demand for Tesla shares on the stock exchange. A firm's assets such as a patent, a real estate portfolio, or sales exclusivity can also raise its market value. But when it comes to risk, innovation also plays an important role in a company's performance, so there's a lot to think about. Stock market projections and prices are also influenced by the level and expected evaluation of interest rates. After all, with low interest rates, investors are prepared to take greater risks to make higher returns and have easier access to the stock market. Barron also spoke about Musk's influence on both SpaceX and Tesla. He believes that the companies may not do as well without Musk at the helm of affairs. He also spoke about the CEO's work ethic and his tiny house in Boca Chica, which we have talked about in one of our other videos, so you can check it out in our channel. If Tesla has to become the Apple of cars, this is what it means for its stock price and the business. As a baseline, analysts believe that Tesla will generate over $50 billion in sales in 2021, with over 85% of these sales related to its automotive business. In 2035, if electric vehicles represent 95% of all new cars sold, which is still a very big prediction to make. If and when that happens, Tesla has the same 16% market share as Apple does right now. It will be producing 22 million cars and light trucks and generating over $1 trillion in sales, which is enormous. Analysts estimated that Tesla will generate more than $10 billion in net income in 2021, including approximately $1.2 billion in profits by regulatory credits, and that if Tesla could generate the same 24% net earnings margins as Apple does today, it would generate approximately $250 billion in earnings in 2035. Well, we're talking about 15 years in the future, and as Tesla has grown from 0 to 1 million cars, it has built production facilities in Fairmont, California, Shanghai, and soon Austin, as well as battery manufacturing gigafactories in Nevada, Berlin, and Austin. So let us just assume that Tesla will become the Apple of automakers, ignoring that Apple is more than just a handset manufacturer. In the first 3 quarters of 2021, it reported over $150 billion in iPhone sales, accounting for 55% of total sales. It also reported sales from the services segment, including sales from advertising, digital content, AppleCare, and other lines. Suppose we assume that all the revenue was driven by the iPhone. In that case, we get the iPhone representing about 65 to 70% of Apple sales, implying that Apple has a significant business worth about $110 billion this year selling Macs, iPads, variables, and accessories. So, even if you exclude the iPhone, Apple still has a pretty good business. So in our Tesla becoming Apple scenario, we must assume that Tesla will have to incorporate similar extensions into new products. And we must also ignore that the majority of Apple's profit and handset sales come from the mobile advertising and app sales, much of which Apple reports in the service segment mentioned above. Finally, we must believe that Tesla would create something outside the automobile industry to develop anything comparable. This is beyond its over-the-air upgrades or its own app store. While Tesla is the market leader in electric car production, it is unclear if this will continue in the future, especially in a market where many other companies are aggressively creating electric vehicles. One thing is certain, electric vehicles are the future and a fast expanding sector of automobile sales. However, the overall evolution of markets can boost or reduce the value of security in a larger context. For example, in gloomy markets such as those encountered during the 2008 and 2011 financial crises, even healthy and promising values were pulled downward even when there was nothing fundamentally wrong with them. Do you believe Tesla stock will increase with such numbers in the near future? Comment down below.